Hey, what's up, everybody? It's Pete. Welcome to Stocks for Breakfast. Today is Thursday morning, February 20th. It is 2:20 today. So it's 2:20. Grab your coffee. Let's go. We got plenty of stuff to talk about today. I just want to say one thing before we get started on the video. I'm getting some good feedback, and if you have any suggestions about stuff that, whether you're a new trader trying to find your way and reduce the overwhelm, whether you're an experienced trader who's at break even and trying to scale, like finally actually get to the point where you can get paid on a monthly basis. And again, I said monthly very clearly there. Setting daily goals in trading will drive you absolutely insane. I've tried it. You know, everything in trading is, oh, times 20 days, and if I make this amount of money, I'll make that much money for the month. Very hard to do on a daily basis. So set your goals on a monthly basis. But my point is this: if you have any suggestions for a particular challenge or problem that you're going through right now, absolutely feel free to drop a comment in there. I'll be more than happy to get to it in the following video. You can also just send me an email. I have no problem replying to you in the video after I receive the email. So it's pete@stocktradingpro.com. If you like today's video or any of the videos, I'd really appreciate if you could scroll below, click subscribe, as well as click the alert button so you get the email for when the next videos come out. So I want to share the screen today, and I want to start out with something that did come in yesterday, which was exactly how to draw change of trend lines without using moving averages. Because there's log into any software right now, and there's thousands of indicators that can just drive you. It can drive you to drink pots and pots of coffee trying to figure out how to use all of them. And quite honestly, whether you want to use them or not, I would say to keep things as simple as possible, because you don't need 10 watches to tell what time it is. So what I'm going to do now is I'm going to go to the charts. I'm going to start with the SPY so that we can get into exactly how I look at the market. And if you've taken my program, if you're in the coaching program, you know that there's 3 different ways to identify order flow. It's just a question of which way that you gravitate to. But what we're going to do is we're going to start with the SPY, and then we're going to use a popular stock that we happen to be watching every day right now, NVDA, to distinguish the difference between a trend ending versus what you should do when you feel profit taking is coming in. So we're gonna go right to the screen right now, and let's get started. So what we can see here in the SPY is working our way back. I always go from the most logical place where the most significant move started. So if we're drawing this trend line, you always want to make sure that you do not cross through any price action. So again, the obvious question is, if I was drawing this while the market was unfolding, it would be over here, and this would be the first trend line break. So I'm actually going to take this over here and pop that over there. And you'll see how simple this is. But it's simple, but a lot of people don't apply it because they just look at whether it's up or down and not whether or not they should be long or short. And I'll show you what I mean by that as we're going along here. You might not be able to see this because of the name, the SPY is there, but I'm going to leave that in there so we can identify all of the other charts. So essentially what's going on here is we have really solid movement from October through middle of November. This uptrend then gets broken. And remember, very important here not to go through any prices. You want to basically go from the low through the highest low, if that's possible. And then you want to draw, anytime it gets broken, that's the essential line that will dictate whether or not you are establishing a new move in the other direction. And what actually happens here too is now you end up forming a box. Let me slide this over so it's a little bit easier to see. You actually end up forming a box where that is the price. So in other words, there's nothing to do inside of that box unless either you're already long or you're waiting for the next move to happen. And you can see here, actually, we finally got to close above there. And if you've been watching the videos, or if you're a regular subscriber to Smart Money Alerts, you know that that's actually the spot where I would be getting involved, because once we go into this trading range type of price action, I want to see confirmation. Outside of that, confirmation is 1 close, 2 close, and you end up looking for the next move. Now, what we end up happening is, as that breaks out again, now you redraw your trend line to identify a new trend line break. So in this case here, we're going to move this up. Oops, excuse me. We're going to move this up over here. And basically what I'm saying is price needs to break that level now in order for there to be a move in the other direction. So what would end up happening was then we take this one and we move that there, because when the line breaks, you end up having a high and a low that is now your new barometer to determine, okay, we're in a potential change of trend. And again, that's in the coaching program as well. Identifying a potential change of trend is where most of the money that smart traders tend to get chopped up. And you don't want to look back at a stock and say, well, it didn't move, but I kept trading it. And then you look back and you say, oh gosh, it was in a trading range. What was I doing? Look at how simple this is, where you can clearly identify there's nothing going on here. And then when it does break out again. So I want to tie that into looking into NVIDIA, because I'm getting some questions. Excuse me. I hope you got involved in NVIDIA, because we actually called it out 2 days ago. It's almost $30 in 2 days. What I want to point out here is there's a significant difference between moving up or tightening up your trailing stop loss in a position that's still good versus selling short. I've had a couple of people send me emails about, okay, if it's not a long anymore, should I be selling the stock short? And the answer is absolutely no. You don't want to get in the direction of something that's a raging bull market, like we have pretty much all over the place right now, and specifically stocks that are running like this. Now, could you possibly see the stock reversing with all of the gaps and these giant moves to the upside? 100%. That doesn't mean that you just pull the plug. That means that you either scale out of a position and then you add those shares back if you end up seeing the stock pausing and then taking off again, or if you want, you just have a trailing stop and you say, if it gets down to a certain dollar amount, or if it pulls back a certain dollar amount, I'm comfortable. But you do not short sell a ridiculously strong stock, nor do you catch a falling knife. Now, there's other situations, again, if you watch some of the videos, that where we have something that's called exhaustion, or what they used to call on the floor of the New York Stock Exchange, a cleanup print. Exhaustion basically means after a long move, you end up getting these really fast momentum moves with large volume over those last couple of candles, and preferably really large candlesticks as well. Essentially what's going on there is that order that was created, that created this large uptrend or large downtrend, the final 250,000 shares, or whatever number it happens to be, somebody's calling somebody else and they're saying, I got 250,000 left, can you take it off my hands? That print gets done, generally speaking, unless somebody else steps up to look to buy that, is now finishing that trend, finishing that momentum move. So it's usually really solid order flow, finishing momentum in this crescendo of volume and price action. Even in that situation, where if you recognize it clearly, that's still an opportunity to tighten up a trailing stop if you happen to be in a position. It does not mean to trade in the other direction until you get confirmation in the other direction, because if you get spikes to the downside, you can end up having a short covering rally, which just will, usually they're very, very fast because there's people getting out of new positions, people initiating new positions. So always wait for confirmation after you see exhaustion. So NVIDIA is a good example here right now, because we've been talking about it this week. Tighten up a trailing stop if you feel like your profit is what you'd like it to be, or you feel like the move is extended, but don't cut your profit short. Just tighten it up, because it could pause and then take off again. All right. Next, we want to talk about a stock that had 2 times normal volume today and a significant breakout. We're going to look at Zillow. Now, one thing that's interesting about Zillow, you can see obviously a lot of the stuff I've been calling out this week has been exploding through levels. Now, what's not really working in this price action environment that we're in right now is profitably trading breakouts the first time they break out. We spoke about it yesterday. There's been a few candlesticks where you get these nice clean breakouts, the next day is an inside candle and it pulls back. So what we're looking to do here in Zillow is actually look for it to hold this 52 level. And the reason we're not buying today, and this is important, whether you've taken the course or not, or whether you're in the coaching program or not, there's certain types of moves that I call saturate themselves. They're saturation plays. And you can see here the stock has already traveled from, let's call it 45 to 55 over this period. So it's already moved. The buying pressure has saturated itself at this point. You can see that it closed off the highs the last couple of days. So at the end of the day, there hasn't been that buying pressure to keep it on the highs. But the stock did double its normal volume yesterday. And that's something that I look for every single day. Where do stocks trade? And how much did they trade at that particular price? There's actually a really good book that came out in the 1930s called Tape Reading and Market Tactics by Humphrey B. Neill. You can pick it up on Amazon for like $8. Very, very good. Maybe I'll put a link below if I can find it on Amazon. But my point is, scanning for stocks at these price levels, it pushed through I'm going to wait for the stock to now pause above 52, look for the next move. And as we said yesterday, I keep it simple. I just look to the most recent moves for my profit targets. Don't make it more complicated. Keep it simple. The stock basically went from 45 to 55. So if we pause here above 52, 53, I'm looking for a $10 move. But start scanning for those as well. Look for double volume and see where that price action happened. JetBlue I pulled up today for a simple reason. I'm also getting some comments about what I had mentioned yesterday about stocks closing on the lows. When you have a strong stock that pulls back, preferably you'd like it to close on the lows, and the next day, which today would be, we want to buy that stock the next day at or near yesterday's low as support. Ideally, I would like to see it happen after 2 days. You get one down day, you get a following down day closing on the lows. Then that third day is a perfect day to bid support, looking for it to move higher. So JetBlue is actually setting up a trade for in the tracking journal. We'd like to see one more red candle like this, close on the lows, and look to get long. But what's kind of interesting here as well is we had this breakout, we failed the next day, and then we had an inside candle and we pulled back. So we're kind of seeing what we're talking about here in real time. So JetBlue, look for those closes on the lows. You get a better distance between your reward and your risk potential. So you're expanding the potential profit on the trade in exchange for accepting risk. Next we have Square, which we've also mentioned this week. Square actually gave us the confirmation that we're looking for. We have a close above that level. Now we'll be looking for a trade today. This has roughly a $20 profit target up to the next move. If you remember, we said we're waiting for confirmation through this level. Got it yesterday. Now we're looking for a new entry today. TSN is an interesting setup today too. We actually had monster volume breaking through support. I know yesterday we talked about not short selling a raging bull market. This stock clearly has relative weakness to the market. So, and we punched through it. Let's pull up volume really quick. I'm willing to bet that the volume is big too. So yeah, so question that we got yesterday as well is, what is fuel? Fuel is when you get a large body candlestick with a lot of volume, a large spike in volume through a support level. Now, technically fuels, I'd like to see it coming out of a tighter channel, a longer term channel. This is a much bigger, wider channel, which many consider to be a topping pattern. If you read on the website, the column on order flow, it's a really long article, but it's really good. It talks about how institutions essentially advertise stocks for sale with whippy type price action, and we're seeing this here. So this is a pretty interesting one because we're going to get into a second about how coronavirus is and affecting the market in some particular stocks. But this stock is already showing relative weakness to the market. It's similar to the trade that we took in Boeing a couple of weeks ago that didn't work out, punched through, waited for a couple of days to hang through that level and then have a move to the downside. The reason I like this one so much is a massive spike in volume, as well as the fact that it's relatively weak to the market. And it's weak before the market turns around. So this is one I'm going to make the same exact trade that we looked at in Boeing, where we waited for a couple of days to stay below that level and then look for a spot to short. Boeing didn't work out. We actually got out for a small loss, I believe it was, on that one because it actually spiked. I'll show you the trade in a second. But I'm keeping an eye on this one as well. Let me go to that Boeing trade. And something I want to point out as well. Let me get the volume off the screen here. This was the trade in Boeing, just so you can see some relative mix of types of trades here. This was the trade here. We actually got it to trade below. This inside candle here was what we were looking to sell short. The next day it did not break down, so we took a small loss here, and you can see it rallied. So I just wanted to give some context to the ideas. Next, I want to talk about Amazon for a second. I don't generally trade Amazon. It's trading at highs again, but there you'll see on the blog today that there's a ton of news about Amazon needing to order extra supplies because coronavirus is disabling their ability to get stuff shipped out of that area. So just keep an eye on this. And again, this is not saying if you're long Amazon, get out of Amazon. I'm just saying that there's a story in Amazon right now, which again, if you haven't taken the coaching program makes a very clear distinction between charts without news, where you're just reading price action and volume and you're super confident, versus reading charts and news. You throw the news in there, it's a completely different trade. Next, actually a good lesson here in IBM. I wanted to make sure I brought this up because we get some questions in reference to how aggressively should I trade. What I want to point out here is we clearly have a pullback in IBM. Not really a super clean pullback. I would have actually thought this pause here would have pushed higher. It didn't. Have pulled back. Probably shook out a lot of people here, but that's not really the point. The point I want to make here is you can see that Amazon was, IBM, not Amazon. IBM was in a multi-month trading range. Then the stock broke out, right? So we broke out here, pulled back and broke out again. There's roughly 10 days of trading where there was real commitments with dollars to make that move from, let's say, 138 to 158. Only 10 days. 10 days is decent, but only 10 days. Compare that to what's going on in the SPY, where we have multi-months, as a matter of fact, years of buying. A lot of money was committed to make the SPY and the market move from here to all the way up here. If you have 10 days worth of price action that you're leaning on, remember we talked about yesterday, to build your argument, versus you have months of history where you built your argument. 10 days versus 2 weeks. 10 days versus 2 years. That's going to matter when you're deciding how much risk you're willing to accept on the trade and how you're going to manage the trade. When I say manage the trade, you can be a little bit more aggressive when you can look at a stock and say, wow, smart money has really invested a lot of capital and bought a lot of shares. I'm going to stick with them until I see a change in that. And I can be aggressive in my idea because I don't see a change of trend, which I just showed you how to do in the beginning of the video. In this case here, we only have roughly 2 weeks worth of buying. So again, 2 weeks, 10 days, 5 trading days. You can trade this stock, but you would ultimately not be aggressive on your initial entry, and you'd want to build a position with a little less conviction because you don't have a lot of buying history behind it. So I thought this was kind of cool when I pulled it up. I thought it was a good lesson to really, so you can look at a chart really quick and say, how much conviction should I have in this trade, and how will that affect how I build the position and ultimately manage the trade? So if you could just think about how much money was committed by smart money, that should dictate your opinion on the stock. And finally, we have the last stock we're going to talk about today is PayPal. And PayPal doing very similar to what we looked at in Zillow before breaking out. You can see that the first breakout did not hold. That's kind of what I'm talking about before, and then got below there. It did stay in the area, though, which is kind of interesting. Now we actually have we actually ended up getting a close above and then an inside candle breakout. If you're watching the video, you know I love my inside candle breakouts. But what's interesting about this? Very quick quiz, right? What's interesting about that? Inside candle breakdown did not fail and actually broke out to the upside. So what we're kind of looking for here is, because it's already gone from 128 to 123, it's probably closer to saturation than it is to having a next move higher. I'm looking for the stock to pause in this 121, 122 area, stay above the breakout of 120. And then I'm looking for the next move, which you can see here. This one was 112 to 122. This one was 108 to 118. So roughly a $10 move. So next move in PayPal I'm looking for after it pauses for a couple of days is I'm looking for a $10 move roughly from 122-ish to 132-ish. So that's Stocks for Breakfast. It is Thursday, February 20th, 2020. I keep saying 2020. It's throwing me off. Have a great day. If you have any questions, I will put the link below for anything I mentioned here. Have an awesome day.